Welcome back. Let's get straight to a couple of earnings that came by yesterday. IMFA, Indian Metals and Ferroalloys reported a weak set of numbers yesterday on the back of some price volatility. The stock was down 15-16% from yesterday's high as well. So let's see what the way forward for the company is. We are now joined by Mr. Subhrakant Panda, the MD of the company. Thanks a lot, Mr. Panda, joining us on the phone line from Odisha. Weak numbers given the price volatility that we saw. So if you could just put a few numbers for our viewers on the table. What were the average ferrochrome prices in the past quarter? What's the current prices? And what is the outlook for the next quarter?
Good morning. You're absolutely right that ferrochrome has witnessed unusual volatility, and that's what has affected the Q2 numbers. Because we sell about 75 to 80% of our output against long-term contracts. So we were locked into Q2 quarterly contracts at an average realization of about 63,000 rupees a ton. And thereafter is when spot prices started increasing, but we were not really able to capture that. But subsequent to that, there has been a sharp increase in the benchmark price by about 25%. And in as much as the ongoing quarter realization is concerned, we are going to be seeing an average realization of a little more than about 81,000 rupees a ton.
All right. So, Mr. Panda, then the realization should jump up by close to around 15 to around 16,000 rupees, at least for quarter three. But I wanted to ask you about, a couple of your mines were shut. Those are the mines that give you your chrome ore. Are they fully functional now? Did you have some high-cost chrome ore that you had bought from third parties that affected some part of these quarter two numbers?
No, that's not the case. The mines were actually operational from the third week of June.
Okay.
We did buy a little bit of chrome ore from the open market in order to meet our balancing requirements.
Okay.
But that has not contributed much. The mines are now fully functional.
Okay.
We are in fact in the ongoing quarter. We are in both in Q2 and in Q3. We are working hard to actually to raise more than what was originally budgeted, because we of course have to make up for the deficit of the first quarter when the mines were shut. But in terms of costing, what has affected, of course, is coal, because coal prices, as you would know, are moving up. Have moved up quite a bit.
Okay. All right, Mr. Panda. So we'll keep an eye out on that. In fact, the street perhaps seems like it's listening to you. The stock has moved into the green, inched his head above that flat line. We'll keep an eye out on that. But as far as the volumes are concerned, if you could give us some picture of what kind of volumes you would see in FY18. Last year you saw what, 233,000 tons, somewhere thereabouts. The first half it's been flat, though we saw some traction in the second quarter. Is that traction likely to continue?
Traction is definitely going to continue as compared to a production of roughly 52,000 tons in Q1. We have produced a little bit more than 58,000 tons in Q2. So again, Q1 tonnage was affected a little bit by the mines closure, because we were stretching out the available ore stock. So none of that is a concern right now. And as against H1 production of 110,000. We are looking at FY18 guidance of about 230 to 235,000 tons. So broadly, I would say about 60,000 tons in each of the remaining two quarters.
All right. So 60,000 tons, sir, in each of the two quarters. You said that, in fact, your realizations are currently at around 81,000 approximately. What would be your cost of production now? Is it, including this spike that you're seeing in raw material costs like coal? Is it at around 55,000, 54,000? That could give us a rough EBITDA per ton.
Yeah, that's broadly where we are in terms of costing. The little bit impact of whatever ore we bought from outside, that will sort of ease off. Coal is something that we are keeping an eye on. Because, as you know, electricity is a major input. But by and large, I would say that in terms of EBITDA numbers going ahead, we will see actually numbers which are more akin to Q1 than to Q2.
All right, Mr. Panda, if you're going by those numbers, 60,000 tons if you sell on a quarterly basis, and roughly if you do an EBITDA per ton of around 25 25,000 rupees, then EBITDA per quarter would be roughly around 150 crores. Is that doable?
That certainly looks doable. That in fact is what we are looking at Q3, and Q4 should be similar numbers. Of course, subject to what happens in terms of price volatility. But I must reiterate here that the extreme volatility that we have seen in the past couple of quarters is not something that we are anticipating going ahead. So I would expect more, stable or a narrower band of price movement in Q3 and Q4.
Fair point, Mr. Panda. So 150 crore per quarter is what we can see in terms of EBITDA. But can you tell us what exactly is the debt on the books? Your finance cost seems to have come off by 10%. Are you looking to repay some more debt? What is the debt and how much are you looking to repay, if at all?
Well, we have actually been extremely conservative, and I think that pays dividends. The long-term debt on the books is a little more than 700 crores, 713 to be precise. So going ahead, looking at the sort of cash generation that we're looking at, we will certainly evaluate all options, which could be a sort of a combination of paying off some of the debt. And we are actually also starting to work on our expansion plans, which will be led by an increasing mining input, which is of course a bit of a longer term exercise because we are in the process of shifting from open cast mining to underground mining, and the medium to long term plan in this regard is we move from about 6 lakh tons of output to 9 lakh tons in the first phase in the next 3 to 4 years, and then step it up to about 12 lakh tons, and correspondingly increasing smelter capacity to consume that ore.
All right. Thanks so much, Mr. Panda, for stopping by and in fact giving us all those details. So that's the management there of IMFA clarifying that in fact realizations have moved higher. Expected to do at least 150 crores in terms of EBITDA per quarter, but the stock is still seeing some selling pressure. Remember the last few days, the stock saw a sharp run up. Yesterday, remember, the stock was at around 790 rupees approximately, and it's corrected from there. And it seems that selling pressure is continuing as we speak as well after the initial uptake that we saw on the stock. Well, we'll slip into a short break, come back, continue our focus on the markets as well as on stock-specific action.